Howdy, everybody. Welcome to Liberty Call. Today is Friday, January 12th, 2024. Hope everybody's having a fantastical day out there. It's not bad here in Colorado. We got clear skies and it's cold. I had to go and pick up mail at my office a little while ago, so it was quite chilly. It was above freezing down at my office, not so much where I live. So it's about 10 degrees cooler up here. So anyways, like I said, hope you're having a great Friday. If it is your first time watching Liberty Call, you could do me a favor. Yes, you. I see you sitting there. Could you give me some thumbs up, a like, a share, a subscribe, and press the notification bell? All right. Well, it's kind of been an interesting week. Things kind of fell apart this morning, and but they did make it back, at least for the S&P and the NASDAQ, make it back to break even. So let's go ahead and take a look and see how the indexes did globally. The Dow Jones was down 0.31%, 118 points, closed at 37,592. The S&P 500 was down, or I'm sorry, up 0.08, closed at 47.83. NASDAQ up 0.02, 2 points, closed at 14,972. The VIX was up 2.09% today. It's at 1270. Canada up 0.34. Brazil was up 0.26, and Mexico up 0.3. All right. Over in Europe, Germany was up 0.95%, the UK up 0.64%, France up 1.05%, the Netherlands up 0.95%, Spain up 0.9%, Italy up 0.73%, Switzerland up 0.65%, and Portugal weirdly down 0.79%. Russian exchanges both green, MOEX up 0.12%, the RTSI up 0.37%. And the overnights, the Nikkei in Japan was up 1.5%. Australia down 0.1%. New Zealand up 0.27%. In China, the Shanghai was down 0.16%. The Shenzhen component down 0.64%. China A50 down 0.21%. DJ Shanghai down 0.24%. Let's see, Hang Seng down 0.53%. And the Taiwan weighted appears to have been closed. All right. That's everything there. Let's go ahead and get to the weekly numbers and see how they turned out. Starting out with the Dow Jones. All right. Looks like it's going to finish the week up 0.71%. The S&P 500. It's going to finish off up about 1.64%. The NASDAQ. Ooh, I missed it. There it is. Up about 2.74%. So that looks like it's going to be the big winner for the week. And the Dow Utilities down 1.32%. And the Dow Transports down 0.22%. So like I said, it looks like the NASDAQ composite is the big winner for the week. So let's take a zoom out. We'll start with the Dow Jones and just look and see how things are lining up. Let me put my lines back on there. All right. So this is the last, it's beginning at 22. This is all of 22. This is all of 23. And since from that point, we have really gone nowhere. About 2.75% in 2 years on the Dow. Let's look at the S&P 500. It is basically up about 1%, and the NASDAQ over that same period of time, it's actually down 7% from the peak before the beginning of 22. So not great, but that's how things are shaping up. So depending upon how you think things are going to turn out for this year, set your portfolios accordingly. So, all right, let's go ahead and get into the economic data that came out this week. Starting out with jobless claims, we came in at 202,000. Forecast was 210. Last week's number was 203. Continuing claims came in at 1.834 million. Forecast was 8.71 million, or I'm sorry, 1.871 million. Forecast was 1.868 million. The U.S. trade deficit, or trade balance, but it's in a deficit, was negative 63.2 billion. The forecast was negative 65 billion. Last month's number was a negative 64. So we did improve a little bit. The consumer price index grew by 3.4% year on year. The forecast was 3.2%. So if you remember a couple days ago how the market went down the tubes, this was a big reason why, because this telegraphed to a lot of people that the Fed's probably not cutting interest rates anytime soon. The month-over-month number was a growth of 0.3. All right. The U.S. balance sheet is currently sitting at 7.687 billion. And the last month's number was 7.681. So it actually went up a little bit. If I'm no, I'm sorry. It's 6. Yeah, it went up by 6 billion for some reason in the last month. That's a little weird. All right. The producer price index year over year grew by 1%. Forecast was 1.3%, and the previous month was 0.8. And on a month-on-month level, it grew by 0.1%, or it contracted by 0.1%. Forecast was growth by 0.1%. All right. So that is all the statistics and data that was big news this week. Let's go ahead and move over to the market recap for today. Stocks in little change as earnings offset inflation data. All right. Get up to the top of my notes. All right. U.S. stocks closed with minimal changes on Friday, fluctuating between modest gains and losses. Mixed bank earnings offset cooler than expected inflation news, which raised hopes for Federal Reserve interest rate cuts. Data revealed unexpected decreases in U.S. producer prices in December, with the cost of goods declining and prices for services remaining unchanged for the third consecutive month. This contrasted with Thursday's hotter than expected consumer inflation reading. The possibility of a rate cut of at least 25 basis points by the Fed in March increased to 79.5, up from 73.2 in the prior session, according to the CME's FedWatch tool. For the week, the Dow gained 0.34%, the S&P 500 rose 1.84%, NASDAQ climbed 3. Well, these numbers are a little different than what I had. The S&P's gains marked the largest weekly percentage rise since mid-December, and for the NASDAQ, as it was the largest, and it was the largest since early November. Bank of America fell 1.06% after its fourth quarter profit shrank, and Wells Fargo's warning of a 7 to 9% drop in net interest income in 2024 led to a 3.34% decline in its shares. However, Citigroup rose 1.04% despite reporting a $1.8 billion fourth quarter loss and anticipating further job cuts. JP Morgan Chase edged 0.73% lower after reporting its best ever annual profit and forecasting higher than expected interest income for 2024. The S&P 500 Banks Index ended down 1.26% after falling as much as 1.7%. The Dow fell primarily due to a 3.37% decline in United Health after reporting higher than expected medical losses. Delta Airlines tumbled 8.97% after revising down its annual profit outlook. Tesla lost 3.6% after reducing prices of some new China models and planning to suspend most car production at its factory near Berlin. The S&P index recorded 37 new 52-week highs and no new lows, while the NASDAQ recorded 134 new highs and 86 new lows. All right, so, it's kind of good news and bad news. One bank reports good news, one bank reports bad news. So just kind of the way things are right now, while companies are jostling to, make their books look good and, keep their share price high, until the eventual, the wheels come off the train. So, all right. One last article here has to do with the jobs numbers. Full-time jobs suggest recession risks higher than thought. This comes from Lance Roberts via realinvestmentadvice.com. Let's see what he had to say. In the most recent BLS employment report, that's the Bureau of Labor Statistics, the percentage of full-time jobs relative to the population dropped sharply, signaling higher recession risks. The decline in full-time employment challenges the notion of a soft landing and suggests that the economic environment may be weaker than anticipated. I'm actually listening to a podcast right now with Mr. Gene Epstein, and he's talking about how the economy is crap. It's not great. It's not even good. It's just crap. So if you want to listen to it, let me know. I'll send it to you. Where were we? While the headline job numbers appear robust at 216,000, the decrease in full-time jobs is a crucial factor to consider. The current economic scenario has been stronger than expected, primarily due to massive monetary infusion supporting economic activity. However, the manufacturing side of the economy has been in correction for over a year, as indicated by the ISM Manufacturing Index. Despite this, the service sector has kept the economy afloat, constituting nearly 80% of every dollar spent. The recent decline in full-time jobs is significant for several reasons. Full-time employment is crucial for sustainable economic activity, providing higher wages, benefits, and health insurance to support families. The data reveals that the recovery in jobs lost during the economic shutdown has not translated into the creation of many new jobs. Additionally, relative to the working age population, full-time jobs have dropped dramatically, a trend often observed at the onset of recessions. CEO confidence, currently at levels typically associated with recessions, aligns with the decline in full-time jobs. Companies seeking to protect earnings and profitability may cut full-time jobs, a significant expense. This trend is particularly noticeable with the surge in foreign-born workers entering the U.S., providing an alternative hiring source for companies. The potential substitution of full-time employees with part-time workers, technology improvements, artificial intelligence, and robotics can be observed in the response to threats to profitability. While the recent downturn in full-time jobs is in its early stages, it serves as a critical data point to monitor. Historically, a decline in full-time jobs has been indicative of an impending recession. The CEO Confidence Survey further supports this notion that a recession may be underway. Despite optimistic predictions of a soft landing, the probability suggests that indicators like full-time jobs warrant close attention in assessing the economic outlook. All right, well, so there's some food for thought and some things to pay attention to as we, try to make our way through the landscape of this current economy and not, hit any potholes or, have any bombs dropped on us and avoid those black swans. So, all right, well, that's everything I had for the week. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. Monday is a federal holiday, I believe. It's MLK Day, so the markets will be closed, so probably no video. I'll probably send out my weekly updates and stuff like that, just the paperwork stuff that I do on Mondays. But if you need anything from me, give me a call. I will be around, so if you need something done for outside of the markets, let me know. I'll be happy to get that done for you. So, all right, well, that's everything I had. So hope everyone has a fantastical weekend. We got some playoff football on the horizon, some college basketball. My Cougs are playing tomorrow. They lost the other night. First loss of the season was very sad, but it happens. I think they lost by 2, maybe. But they're doing really well. I think they were number 2 in the country as far as they probably are going to drop on Monday when the new rankings come out. But anyway, so got some pro football and some college basketball. Ooh, and it's cold outside. I mean, it's going to be like below 0 here for the next couple of days. So hopefully my heat works and we don't freeze to death. But anyways, all right. Well, y'all have a great weekend and I'll talk to you probably on Tuesday. Adios.